This is Chicago's Morning Answer with Dan Proft and Amy Jacobson on AM 560. The Answer.
Top of the morning. Happy New Year 2018. Dan and Amy, our maiden show of the new year.
And we have some breaking news.
What's that?
Matt Lauer's replacement has been named. Are you ready?
Yeah.
Hoda Koda?
Hoda.
Hoda.
Hoda Kotb.
Hoda Koda. Yes. And she
One
was
of the great
there,
names
you know.
in television.
Yes. It just rolls off the tongue. And she was there, you know, when Matt Lauer was suddenly abruptly fired and she was holding hands with Savannah Guthrie. So Savannah Guthrie has already tweeted a selfie of the two saying, "This is us." That's the new show. It's a new lineup.
Great.
Great.
It's probably not going to be Chris Matthews. He
Oh, yeah.
he may be the next casualty of the Me Too movement, and it couldn't happen to a nicer guy. We'll get to that. Chris Matthews' professional problems, it would appear.
Yes.
But we're going to talk money here in the new year. What to do with all of your money, particularly those not living in Illinois who may actually see some extra cash in their pocket thanks to the tax cuts that were passed around Christmas. Should you indulge a foray into cryptocurrency? Last time we had Scott Diamond on, he guaranteed us that Bitcoin would go to $250,000 a Bitcoin. And so I put all my money into Bitcoin, and
you did.
and it's only doubled since the last time he was on, which was about 6 weeks ago. It hasn't increased as with the exponential factor I was hoping for, but it was all the rage in December when it shot up to $20,000. It's trading at like 13.5 right now, and nobody quite understands it. And there are those who say it is Dutch tulips. It's one of those runs 500 years ago. It's a total bubble. It is going nowhere. And others who say burn all your cash because cryptocurrency is the wave of the future. So which is it? Scott Diamond, cryptocurrency expert, joins us now. Scott, thanks for being with us again.
Absolutely, Dan.
Hey, did you bring Bitcoins for stocking stuffers for us?
I've got a few. I just don't know how I'm going to distribute them to you.
Yeah.
You give them to the blonde.
Send me your Bitcoin address. You have one yet?
Yeah.
No, I don't even know what that means.
You have to
Okay.
you have to go to a like Coinbase and set up an account, right, Scott? Yeah.
Yes.
Give us the if you wanted to buy Bitcoin or one of the other 100 or so odd other cryptocurrencies, how do you do it?
Well, Coinbase is one is the largest here in the United States, so that's kind of the 800-pound gorilla. There are other exchanges. I'm certainly not shilling for them necessarily, but all the exchanges right now are just being crushed with traffic. So right now there's a lot of exchanges that aren't even taking new applications or new account openings because their backlog is so large that they're trying to reallocate staff internally in order to be able to churn and make sure that the new accounts are open correctly.
Well, so how should people view this run-up that happened last month? When it went from, I think when we talked 6 weeks ago, was at trading at about $6,000 a Bitcoin roughly, went all the way up to 20. It's receded back to 13.5, as I mentioned. But it was the focus of a lot of discussion in the markets on Fox Business, on CNBC throughout the month of December. And the debate is this a bubble and make your money and get out, which apparently some people did, or is this a real thing to think about long term?
Well, obviously, I believe that it's a real thing and it's not going to go anywhere. The genie's out of the bottle, so to speak. So, I mean, really, a lot of the price movement, I think, over the last 6 weeks here or so has been really a lot of professional money, professional traders getting into the space with the futures and the CME and the CBOE.
Right.
And then what's happened, I think, just recently in the last 2 weeks is more predicated upon the fact there are now shorting mechanisms. So the pros are out there, the speculators are out there. They're throwing, big dollars at shorting and longing, which, to some people kind of, could be a scary proposition. But to me, I think it adds a lot of legitimacy to the marketplace because this is now an emerging asset class. So I think it gives it a lot more legitimacy long term.
Well, what is Bitcoin Cash?
So what happens in these ecosystems is I shouldn't say it's easy, but it's pretty simple with people with the technical knowledge to do what's called a fork of the chain. So essentially, what that is I use the analogy of like the USFL or the XFL forking from the NFL, where a group of people decided, hey, the NFL is good, and we're going to take all the good things of the NFL and we're going to make it better. So that's what people do is they take the Bitcoin blockchain and they take a snapshot of it, and then they start their own chain with the history of Bitcoin, but moving forward with different rules.
I hope it works out better for them than the USFL or the XFL
Yes.
worked out. Yes. And I understand this is, an entrepreneurial venture. Take a step back and just kind of explain cryptocurrency. Bitcoin is obviously the big dog, but the others as well, and the underlying blockchain technology, and how people should start to kind of understand it who are still trying to get their minds around it. I mean, is this just like buying gold? It's a hedge against inflation. It's a good store of value, and it's got no other utility? Or what exactly is this in terms of an investment or a technological innovation?
Well, I guess really the answer is, it really depends on who you are and where you live in the world. Here in the United States and first world countries, it's really just as a store of value. People call it digital gold, and I think it's a good way of analogizing it.
When you got your puppy recently, you didn't pay for it in Bitcoin.
I did not. I did
Right.
not. I was tempted to use Bitcoin to buy airline tickets back in October, and I'm glad I didn't.
Yeah.
So that would have been probably one of the most expensive flights I'd ever purchased.
Right.
So here in the United States, where we have access to robust capital markets, it's really functioning as a store of value. I think it's superior to that of precious metals. I do tell people that that's kind of the first, the first peg that's going to fall in terms of value transfer, moving out of precious metals and moving into cryptocurrencies. So you got a store of value, and it's an absolutely perfect unit of account, which is another aspect of real money, one that the U.S. dollar doesn't even enjoy.
Well, is anybody cashing in their Bitcoins?
Well, certainly.
And then is there a certain amount if I buy a Bitcoin or become part of a Bitcoin? Because I know some people that are putting in 2,000 of the 13,000, like forming a group to buy a Bitcoin. Is there a certain amount of time you have to wait until you cash out?
Well, no, not as a 24/7 marketplace. So really, you can buy 1 penny worth of Bitcoin, because it is subdividable 100 million parts. And really what I tell people is that Bitcoin isn't a thing, it's a term. And that term just refers to having control and ownership of 100 million pieces of code that are on the Bitcoin network. So that's what gives a lot of the future possibilities in being able to move money around in a streaming fashion where, people could literally get paid by the hour as opposed to weekly or biweekly or monthly.
What about one of speaking of that, the criticisms? I guess it's a sort of a criticism. I mean, I don't think it's criticism of cash when it's when cash is used by these criminal organizations. But one of the things that's been said is because of the nature of Bitcoin and it being untraceable, it being kind of extra legal in terms of a regime governing it at this point, you have terrorist organizations and other criminal enterprises using Bitcoin.
That's correct. They also use cars and they use the internet. They use, tons of
Right.
other things too, and we don't necessarily demonize those things because of that. Bad people will do bad things with technology, and good people will do good things. So I think over time, as the developers and the community starts being able to roll out the use cases, it's going to become more apparent that there is real value here that is not nefarious.
I mean, do you see a time where Bitcoin or other cryptocurrencies will actually be used for pedestrian daily commercial transactions?
I do. But that time is going to come when the scaling operation is going to be able to handle the transaction flow. So there's a big debate within the Bitcoin community primarily, but then the alternative coins, which are trying to say, hey, we can transact and make confirmations happen much more quickly and much more cheaply. And that at that point, once you get to those scaling solutions, whether it's the Lightning Network on Bitcoin, atomic swaps, that's when things are going to become
I
used
love
for
atomic
production.
swaps. Name of your elementary school band, right?
Yeah, exactly.
Atomic swaps.
Adam Ant cover band. That's right. So just think about would you analogize this to like the infrastructure, the transactional infrastructure that was built around the internet, PayPal and other means of transacting business online came into fore?
Yes, absolutely. I mean, people use the internet analogy quite a bit when it comes to Bitcoin specifically in terms of, hey, this is still like the 1988 where, of the internet, where people don't quite see where is the utility on the internet. And as much as the internet changed things, it really just took a centralized economy and just moved it into a more convenient format. So you still go to Amazon to make your purchases, and you're still using Visa and MasterCard to transact. Those 3% transaction fees are loaded into the price and the margins of every merchant anyway. So if anybody tells you that paying a 1% transaction fee on the Bitcoin network is usury, it is not.
What about tax liabilities?
That's a great question. It's one that comes up often, especially for people who are not using cryptocurrencies for tax evasion.
Right.
Which it can be with just
Sure.
a simple knowledge to do so. But at the end of the day, excuse me, the IRS is going to have to, here in the United States, is going to have to start coming up with a mechanism so that people can understand how do you record your gains. Right now, the IRS calls Bitcoin and cryptocurrencies digital property. So the question is okay, so now you've got long-term, short-term capital gains implications. But then the question is how do you actually record a transfer? There's some very responsible legislation that's pending now in Congress that is going to be allowing a $600 exemption, so to speak. So if you buy a Bitcoin for $1,000 and it goes to $2,000, and then you buy $100 worth of gas, you don't have to claim a $50 capital gain on that. So that's going to take time for that environment to be created.
Right now, this is self-reporting. I mean, the
Absolutely.
IRS has no access to the information. It's not like your employment records.
Yes, I mean they can have access to information because all of these exchanges that you have connected with your U.S. bank account do have records. It's just that they are not voluntarily providing those records to
So the IRS would have to demand them, subpoena them.
subpoena them. Correct, and they're starting to go down that road. Now the question is that the exchanges, an exchange may know how much you bought any cryptocurrency for at any given time, but if you move it off the exchange, they no longer have visibility. Do you still have possession of it? So they can't really report a gain. All they can do is say what was the entry point. So I mean that's why I buy and hold, because I think that the looming tax implications are going to benefit the people that keep better personal records.
What's the next the next necessary shoe to drop for this to kind of mature into a next level idea? Is it, there was some rumors that eBay was going to start accepting Bitcoin. Is it something like that, a mainstream online retailer or reseller, Overstock or something like that, in addition to Overstock, taking Bitcoin and making it, I guess, sort of demystifying it?
Yes, that will, obviously when you got mainline retailers using it, then you add that the means of exchange, which is the third characteristic of money. So that will absolutely help. But at the end of the day, the primary thing that needs to happen in this ecosystem is for the ability to scale with cost, to be able to prove to people in first world financial areas that this is a beneficial use of spending Bitcoin.
Jamie Dimon suggested, and I guess he walked this back in a little bit, but his initial suggestion about Bitcoin was that it was a bubble and it shouldn't be taken seriously.
Yes, and there's plenty of skeptics out there, and I love listening and reading skeptical perspectives, but almost every single person who's a skeptic reveals in their opinions their lack of knowledge. They look at a price, they look at a chart, they apply their first world financial brain and says this is impossible, so this is going to blow up, but they don't ever spend the time to actually understand the history and the future and the current development.
And the underlying blockchain technology, talking about, Bitcoin is obviously the emphasis, but there are a lot of other cryptocurrencies out there, and they try to do different things, or at least their business models are different. They're angling for something different in terms of the use of blockchain technology. You were telling me previously about one that's specifically targeting like the automotive industry in Germany for helping to develop the driverless cars. And so just the kind of the utility of the underlying technology as perhaps one of the things that people don't really understand, so they can't fully see the possibilities of the currency, much as anything else.
Sure. And I tend to stay away from using the word currency. I like to just call them assets.
Okay.
Because that's truly what most of these are. As the one you mentioned out in Germany, it's a group called IOTA, IOTA, and they are developing a blockless blockchain type of an idea where the transaction speeds and the transaction costs are essentially zero. There's no mining environment, everything that exists in the Bitcoin thing. So this is an idea that we don't know where it's going to go, but it is people being creative, what else can we do with this type of technology to re-engineer it for different purposes.
So you're still bullish on Bitcoin? You're holding to your $250,000 of Bitcoin prediction?
Yeah, absolutely. I mean, right now, I was just taking a look at it. I brought my computer here. The Bitcoin dominance is down to 35.9%, which means that of the $642 billion that is in this ecosystem, 35.9% of it is in Bitcoin. So historically, that Bitcoin number has been closer to 80, 85. But this year, with the explosion of all these other currencies, people who feel, I believe, the psychology is like, well, I missed the Bitcoin boat, so let me try to find the next big thing out there to maximize, their returns. My feeling is that over time, the Bitcoin dominance is going to start creeping back up. And I could see a future where Bitcoin dominance is back in the 60, 70% range, and you're talking about, at that point, maybe a multi-trillion-dollar market ecosystem.
And perhaps the advent of like index funds that are cryptocurrency.
Correct. I mean, the ETFs are coming. With the futures out there now, it's adding that layer of legitimacy as an asset class, and that's just going to keep bubbling up because people are not going to let this pass them by. All
right. He is Scott Diamond, cryptocurrency expert. And kind of our ad hoc cryptocurrency investment advisor, as it were. Scott, thanks so much for joining us. Appreciate it.
Absolutely. Thank you.